Hello there everyone, today's video is all about capital gains tax on UK residential properties for expats. So UK expats who have moved abroad and have maintained some buy-to-let properties in the UK, what is their capital gains tax position? Well, for many years it used to be the case that if you were non-resident, so you're an expat and you went abroad, you didn't have to pay any UK capital gains tax on assets, properties in the UK because you were non-resident. Then the rules changed in 2015 and they said, you know what? This is the UK HMRC. They said, you know what? If you are an expat, you're non-resident, we don't care. You still have to pay capital gains tax when you sell UK residential property. So that was a bit of a game changer. Fast forward then to 2019, they expanded the scope of that to say that rule applies not only to UK residential property, but also to UK commercial property for any expats living overseas. But today's video, we're going to concentrate on the residential property. So the buy-to-let property and basically working out what is the gain. How do you work out the gain? Because there is actually a choice available to you as the expat having to abide by the UK tax rules on the sale of your UK property. You do have a choice in working out the gain. So let's take an example. So let's see. Okay, timeline starting from the year 2000, ending in 2022. Assuming, for ease of maths, these transactions happened on the first day of the tax year, on the 6th of April. So 6th of April 2000. Individual, still UK resident, acquires buy-to-let property, 150 grand. Then moves abroad in 2010. So this individual moves overseas, becomes an expat, 2010. They're still there 12 years later. Next in the timeline, we get to 2015. Now this is when they changed the rules. When I said up to this point there was no capital gains on UK property if you're an expat. Then they changed the rules, 2015. And then here we are, 2022. Again, on the 6th of April, we're going to sell, assuming this individual sells their residential property, finally, after having it for 22 years. So that's the timeline. Buy property, move abroad, new tax rules, sell the property. And assuming that they bought this property for 150,000, we don't need to worry about its value when that person emigrated in 2010. We don't care about that. I'll show you why. 2015, though, we do care about the property. So they're living abroad at this point, renting it out. We do need to know what's the value at the date of the rule change in 2015. 225 grand. Finally, the last number we need to think about is the sales price. The sales price on the 6th of April 2022, 275 grand. So that's the timeline. They're the figures. Let's work out the capital gain. Now, there is an option here. Like I said at the start of the video, there's an option. You can calculate the gain one of two ways. First of all, option one. The gain is simply the difference between the sales price and the market value at the date of the rule change in 2015. Sales price, 275 grand. Market value of the property when the new capital gains tax regime came in for expats in 2015, 225 grand. So the gain, 275 minus 225 is £50,000. That's your gain. However, you don't have to go with that gain. You can go with option number two, which is to say, right, the gain, we take the whole gain. So in other words, the difference between what the property was bought for, what it was sold for, and then we time a portion, and you're only subject to capital gain on the portion of that timeline since the rule change in 2015. So in this case, crunching the numbers, sales price is still 275. The cost price, all the way back here in 2000, 150 grand. So the gain is £125,000 over the 22 years. And then we time a portion and we say, well, the bit that's chargeable is between when the rules changed in 2015, 2021, 6 years over a 22-year timeline. 6 divided by 22 times 125 grand gain is gain in play just shy of 35 grand. So in this scenario, on these numbers, the expat taxpayer who's got capital gains on his buy-to-let property that he's finally sold in the UK would go with option 2, because he'd rather pay 34 grand or have a gain of 34 grand than a gain of 50 grand. So just something to think about if you're an expat and you've got UK buy-to-let. Don't always assume that it's number 1 that applies, because there are options, and certainly number 2 could be beneficial. And that's just how I randomly chose these figures. It could have been the other way around, that option 1 was better than option 2. So you just got to crunch the numbers in each specific case and see which is the best for you. Now, the other thing to remember and consider, which is a change not only for expats, but for people living in the UK who sell UK residential property, is the new 30-day rule. 30-day rule, which has only been in for about a year or so, but it basically means that any capital gains tax due on those gains has to be paid within 30 days to HMRC. Whereas historically, it was reported on a tax return, and then you had to pay it on the usual tax self-assessment deadlines the following 31st of January. So if you had a gain on the 6th of April 2022, as in this example, under the old system, the capital gains tax on this gain would not have to be paid until the 31st of January 2024. 22 months down the line. But last year, HMRC changed the rules and said, that's too long. 22 months? No. 30 days, just like with stamp duty. So now, this guy, when he sells in April next year, he's got to pay the capital gain, the tax on this gain, by the 6th of May, not 31st of January, 6th of May 2022, not 31st of January 2024. So do bear that in mind. That doesn't just apply to expats, that's for anyone in the UK selling any residential property now. You have this new 30-day window. So just an overview there on selling buy-to-lets for expats. Slight more complications. This is what if you had this buy-to-let property which was also at some point your main residence that you lived in. That slightly complicates things, and I'll do a separate video on that. And also I'll do a separate video on the income tax implications. So basically, what are your tax obligations to the UK if you're an expat year on year that you've owned this whilst being abroad? But a separate one on that. But this is all about the capital gain when you sell the residential properties, the buy-to-let properties, if you are a UK expat. So hopefully you like this video. If you do, please do subscribe right there. And as always, I'll see you soon.